In today's weekly outlook, we're going to be looking at the key Forex pairs, including the EURUSD, the GBPUSD, USDCHF and the DXY. I'm going to be walking you through the key liquidity areas, some PD arrays and some of the fundamental analysis that's going to go into next week. After last week's FOMC meeting, there's definitely some key things to look out for this week, so let's get straight into it. Right, so firstly on the dollar weekly chart, we have marked out this weekly order block over the past couple of weeks, and we marked out this sell side as a draw. I've taken some of them off now, but if we drop down to a daily time frame, we actually marked out this key low here, and we marked out this key low here, and we marked out some longer term targets just down here that are quite a bit away, but still definitely worth keeping on your guys' chart if we go all the way to the left. These two are the next key liquidity areas within the market. So we actually have come down and swept this sell side liquidity right here, and we have then hit a retracement back up. We swept the previous day's low on the Wednesday and pretty much reversed from there. However, as of yet, if I just mark out this daily fair value gap here, we did tag this area and trade lower towards these targets. Once an external low is taken, we do expect a retracement level. So if we just mark out this as the graded area, we are still within this dealing range at the minute, and we are still in a premium. So as of yet, there has been no market structure shift towards the upside. So until we start disrespecting bearish PD arrays and start respecting bullish ones, there is no reason for me to be looking at a long dollar. So just looking at this from the technical point of view, ICT concepts, we do want to look for shorts within this area, and this is something I'll be monitoring next week to see if we can get some sort of expansion towards lower. And in case you didn't know, last week the Federal Reserve had their FOMC statement, so that is firstly the thing I'm going to be touching on. But before we get into too many technical charts like the EURUSD, the USDCHF, I wanted to touch on the Federal Reserve because Powell's stance from the last FOMC statement is still setting the tone for the markets moving forward. The Fed delivered a quarter point cut, bringing rates to 4 to 4.25% range. Now, Powell was very clear this wasn't the start of a big easing cycle. He called it more of a risk management move, essentially saying we are cutting because the labour market is softening, not because inflation is under control. And that's what the key tension is. On one side, job growth has slowed and unemployment has ticked up. But on the other, inflation is still running above their 2% target, and tariffs and sticky core prices aren't helping. So the Fed's stuck managing both risks at once. The messaging was pretty straightforward. Don't expect aggressive rate cuts. 2 small moves are on the table if the data continues to come out weak, but Powell has made it pretty clear that there is no preset path. Everything is data dependent moving forward on the future. So that means that we'll have to look at the up and coming news events such as the NFP numbers, CPI and essentially core PCE are the releases that are going to be the key news events to look out for in the up and coming weeks. As in line with our previous weekly forecasting, the bias is still slightly dovish for me as the unemployment data has been bad and the labour market is softening. However, I wouldn't expect any aggressive runs as of yet. Therefore, this tips its hand to a more dovish stance, but with inflation still at a higher rate, the Fed is going to tread more carefully around this. So in practical terms, that tells me that the dollar may stay supported going lower if the data continues to come out badly. However, if there is any inflationary surprises, then that could change the sentiment towards another rate cut coming this year. So looking at this from a technical standpoint, this is in line still with this graded swing. We are still at a level of premium. I don't expect this high to get taken due to the fact that we are still overall bearish. And the only thing really that would make me think that this high is going to start getting taken and maybe make a run back up to this initial consolidation would be if inflation data does come out poorly. If we just have a look at the Forex factory calendar, I'll just pull that up right now. We can actually see that the up and coming week, there is not really too much on the Monday in terms of real big news drivers. We have some GBP news at the Tuesday and the flash PMI. However, the main data point for this week is going to be that Thursday, the unemployment claim. So I definitely keep an eye out on this. Just a note, as we have had inflation and the labour market being the contrast, but whether the Fed are going to do a rate cut, the core PCE price index and the unemployment claims are definitely going to play a big hand on whether we see expansion to the up or the downside. So for me personally, I'm not going to take too much of a large stance bearish or bullish at the minute. I'm going to wait until more data prints and see how that is aligned with the Federal Reserve stance of waiting for the data. So essentially what I'm saying is I want to see what these data points bring on the Thursday and the Friday, and that will give me a better idea of the next week after that, whether I want to be an active participant within the market. So if you are intraday trading for this week, I would expect the volatility rate mainly to be around the back end of the week, the Thursday and the Friday. I wouldn't expect too much from the up and coming start of the week. Monday, Tuesday, I would pretty much just sit on my hands and see what happens with price. So moving over to the USDCHF, because that's what I've been covering within my last couple of weekly commentaries. This was the trade that I've been marking out and showing you on a consistent basis week on week. We swept the previous week's high into a weekly order block, strongly rejected from this area, and we marked out this daily fair value gap just as a confluence to our trading idea. If we still expected this low to go that was marked out, we wanted to see a reaction from this area. This order block, fair value gap paired together is a very strong point in price to react from. We got that reaction and we made a nice run down to sell side liquidity. And as mentioned, the Federal Reserve stance is a bit unsteady at the minute, so I did actually take profit here. Once this data come out, we shot down, and then I saw the comments about half an hour later after the basis point cut, and that was sort of my trigger to get out of the trade. I actually did do a full breakdown of this trade in my last video, so if you want to learn more about how I got into this, why I got into this, then definitely watch that for now. But moving over to the euro dollar, this is pretty much what I've got marked out on the chart at the minute. We have come back and retraced into this area here. I've just refined this Fibonacci retracement level a bit more, just as I don't expect this to go. And we have come back into this area as I marked out on the dollar. So I do expect higher prices on the euro from now on, due to the fact that I have a dovish stance on the dollar. And the reason why I've chosen euro over GBPUSD is because you actually look, I've just marked this out for you guys to show you. This swing point right here is the 11th of September, and we go back to the euro, that is the 11th September. So we have already ran that low on on GBPUSD, which shows this is the much weaker pair. If we just go to euro GBP to show that, we see euro GBP has been trading much higher, and that means that the expansionary moves when looking at trading the inverse of the dollar is going to be the euro. That's really going to be the pair that's going to give the fuel at the minute. With this year having a lot of uncertainty, if we look at the dollar, we have sold off highly, and we know that risk appetite hasn't been very high for investors due to the uncertainty. So if we just have a quick look at gold, we can see that this is pretty much doing what it's done for the past couple of years since COVID. We are just making all-time highs from this area. If I was trading this, I wouldn't look at, I personally don't trade gold, but just to give a bit of insight, I definitely wouldn't be looking to pick a high. I would just mark out any new all-time highs to get traded to. Don't be the guy that's trying to catch the top of a market and try and get a big reversal. Yes, it will come, but how many times will you be wrong before, how much will your account bleed before getting it right? It's worth just following the uptrend, especially as the dollar seems to be weakening with bad data. In terms of the bond yield, we are back. We had quite a big sell-off recently on the 10-year. We're coming back up to sort of premium level within this area. I still wouldn't be, I wouldn't look at this and think anything different at the minute. We do have a volume imbalance that we can mark out with here. That's just in the premium. And then we have a couple of arrays within this area, this fair value gap right here, which could be an area that price could reject off of. However, I wouldn't be too concerned on looking at any reversals as of yet. This looks like if we were to drop down on timeframes, if we mark out this as an initial consolidation, go back to the 4-hour chart, this could just be the classic, I'll just delete the Fibonacci, a classic market maker model where we have this initial consolidation, some runs higher, and then a smart money reversal to take us back to these lows. So that pretty much takes my weekly forecasting video to a close. We have a slightly dovish stance on the dollar. However, we are looking at key unemployment data and inflationary data just to give us a gauge of how the next Federal Reserve decision is going to be. But other than that, I'm a big believer in not changing bias too often, as you can get caught seeing everything as a reversal when, if you look at the market, there's always going to be fairly swing highs, and then once it changes, maybe to a more hawkish stance, there's going to be fairly swing lows all the time. So we want to sort of treat these retracements as opportunities to buy at a premium. So that's about all I have for you guys today. That's about everything that's going to be noteworthy within the up and coming week within my analysis. Thank you very much for watching today's video, guys. Check out my trade breakdown as my previous video. That gives you a bit more insight into that USDCHF trade that I took and the reasonings why, the fundamentals, the technicals. So if you want to learn a bit more about that, then definitely do check it out. And other than that, guys, have a safe week's trading.